Investors pulled £150 million from property before M&G suspension. Cranes over clear sky at sunset. Investors pulled £150 million from the Investment Association UK direct property sector in November ahead of the M&G Property Portfolio suspension the following month. According to the latest flows figures from the industry body. The M&G fund had a cash level of 4.8% at the end of November, making it difficult for the fund to meet redemptions. It suspended on the 2nd of December, and despite raising £70.4 million since suspension, with a further £67.4 million in the pipeline, it still needs higher cash levels before it reopens. AJ Bell personal finance analyst Laura Suter noted £1.8 billion was pulled from direct UK property funds in the year to the end of November. There are already reports of an increase in property fund withdrawals from investors after the M&G suspension, meaning this figure is likely to climb higher when December data is in. Targeted absolute return faces £7.5 billion outflows in total. Savers invested £1.6 billion in November 2019, the IA statistics showed. UK equities returned to net inflows for the first time since May 2019, while IA Volatility Managed was the best-selling sector for the first time, taking in £411 million. In contrast, the targeted absolute return sector again delivered the worst monthly net flows. The sector faced £656 million worth of redemptions in November, building on the £566 million net outflows faced by the sector in the October year. Figures.Suter expected the trend to continue well into the 2020s. Outflows since July 2018 now total almost £7.5 billion, meaning that £1 for every £11 invested has been withdrawn during that period. Investors returned to UK equities for Boris bounce, while UK equity funds took in £108 million in November. Over the 12-month period they shed almost £3 billion, noted Suter. Considering the FTSE 100 finished 2019 up more than 17% and the FTSE 250 rose 29% during the year, these investors may be regretting that move now, with the benefit of hindsight. But she noted they would have benefited from the rebound in December as the Conservatives delivered a decisive win at the UK general election. The FTSE 100 rose 2.8% in December, while the more domestic-focused FTSE 250 jumped 5.4% over the month, according to Fund Info. Willis Owen, head of personal investing Adrian Lowcock, expected the trend of investors returning to UK equities to continue in the year. Figures for December thanks to increased political clarity after the 2019 election. For more on this story, visit the news article link.